Why is the stock market falling? Not because of these reasons. I'm Bob Stokes with Elliott Wave International. Financial journalists almost always mention reasons for a given day's market action. For example, on April 22nd, an intraday Market Watch headline gave two reasons for that day's plummeting prices. Why is the stock market falling? Dow drops over 500 points as investors weigh Fed's policy path. Earnings. Prices fell considerably further on April 22nd after that headline published. However, the question is, are the Fed and earnings the real reasons the stock market cratered? Elliott Wave International's extensive research reveals that the answer is likely no. The evidence is overwhelming that news, whether positive or negative, does not determine the market's trend. Besides, on any given day, the news is usually a mixed bag anyway. You can always find a bullish or bearish reason for stocks to go up or down. Mainstream market observers simply pick from that bag what fits the day's price action. As cases in point, let's review the Fed and earnings as supposed causes of stock market action, given these two factors were mentioned in that headline. Let's start with the Fed and a bit of history. The chart is from the March 2019 Elliott Wave Financial Forecast, which shows the lack of correlation between Fed behavior and the stock market. The Fed cut interest rates 13 times from 2000 to 2003, yet the S&P 500 still declined 51%. Again, in 2007-2008, the Fed cut rates 10 times, but the S&P declined 58% from August 2007 to March 2009. Subsequent to that, 9 Fed rate increases starting in 2015 didn't stop the stock market from rallying. Simply put, the Fed does not control the trend of the stock market. Regarding earnings, this chart is from the December 2009 Elliott Wave Financial Forecast. You'll notice on the chart that in the fourth quarter of 2008, the S&P 500 had its first negative earnings quarter ever. According to conventional logic, stocks should have crashed afterwards. Instead, a rally started in March 2009, which stretched all the way into early 2022. So you see why Elliott Wave International's analysts do not look to the Fed, earnings, or any other factor outside of the market when formulating a stock market forecast. Instead, they look to the market itself, which unfolds in repetitive price patterns in accordance with the Elliott Wave model. Indeed, our April Elliott Wave Financial Forecast provided this warning to subscribers. Patterns in the indexes are at junctures where they should resume the decline from the November and January highs. The Elliott Wave model does not promise perfect forecasts, yet in our view, it does reflect how financial markets really work. Learn what Elliott Wave International expects next for U.S. stocks by following the link below this video.